Welcome to this episode of my video series for entrepreneurs and accountants. I'm Ty Carr, and my goal is to help you bring innovative solutions to market and create jobs. I think that's what the best growth businesses do, and that's something I want to be part of. I hope you'll find that my advice on business and tax planning helps you maximize the cash flow used to fuel the growth of your enterprise. Today's topic: how to file for an LLC owned by you and your spouse. Let's suppose you and your spouse own an LLC. Maybe it's an operating business selling goods and services, or maybe it's just a rental property. What I mean by LLC is a limited liability company. Federal tax law doesn't directly address LLCs, at least not in statute. Essentially, the federal lawmakers got lazy when states created the LLC form of business. Instead of creating new tax law to apply to LLCs, federal lawmakers just decided to let taxpayers apply pre-existing tax categories to their LLC. A multi-member LLC will default to being a partnership, what I call a tax partnership. I use this phrase tax partnership because the LLC is still legally an LLC. It's not really a partnership, but for tax purposes, we're treating it as a partnership. And so I indicate that with this phrase tax partnership. When you have a tax partnership, you file a partnership tax return, and that return reports the income, which we then say flows through to ultimately be reported on the owner's tax returns. In other words, even though a partnership, or in this case a tax partnership, files a return, it doesn't actually pay any federal tax. All the tax is being paid by the owners. That's what's referred to as the flow-through treatment. The multi-member LLC can also elect to be treated as a corporation. So you don't have to stick with the default treatment as a tax partnership. You can elect to be a corporation, and that corporation can be treated as a C corporation or an S corporation. C corporations are subject to the dreaded double tax. So that's an unusual thing for an LLC to elect to be. It's more common for an LLC to elect to be an S corporation, which is a different kind of flow-through entity, and I will have later videos on why you might choose an S corporation over a tax partnership structure, even though they're both considered flow-through entities. A single-member LLC will default to being a disregarded entity. So what that means, a disregarded entity doesn't file a separate return from its owners. So if you are an owner who files a 1040, an individual person, and you own 100% of an LLC, the default treatment is that that LLC activity just shows up on your personal tax return. It doesn't file a separate return. This often gets confused with legal liability, and it shouldn't. The fact that your entity is disregarded for tax purposes is not a state liability law concept. So that shouldn't matter, but I would say consult with your lawyer or consult with a lawyer on that issue if you're concerned about it. But keep in mind that where I'm coming from is that the concept of disregarding the entity is not a limited liability legal concept. It is purely a tax concept that says you don't file a separate tax return. Just like a multi-member LLC, the single-member LLC can also elect to be treated as a corporation. That corporation can also either be a C corporation or an S corporation. And again, I hope to put out a video that will explain in more detail why some LLC owners might choose to be S corporations. So with that background, we have the question at the center of this episode's topic. If you have a married couple who owns an LLC, is that considered to be a multi-member LLC? And the reason I ask the question that way is that many of us who are married, I'm married, many of us who are married may file a married filing joint tax return. So we only file one 1040. We kind of treat ourselves as if we're one person, so to speak, for the tax return purposes. And so it raises this issue of, well, if the two of us are legal owners of the LLC, does the tax law recognize it as a multi-member LLC? And the simple answer to that question is yes. It doesn't really matter whether you file your 1040 tax return as married filing joint, or you could elect to be filing separate tax returns. That does not make any difference to this point. The issue or the result is, in any case, the tax law treats a LLC owned by a married couple as being a multi-member LLC with 2 or more owners. So you don't end up being just a one-owner business. What that means is that if you own an LLC with your spouse, the default presumption is that you will file a tax partnership return. You'll file a partnership return. And otherwise, you would elect to be a C corporation or an S corporation, but you wouldn't just ignore the entity for tax purposes. It's not by default disregarded. Now, I say that it's not disregarded, but for every answer in tax law, there is usually an exception. And in this case, the exception is found in a revenue proc. That's tax geek for revenue procedure, which is published guidance by the IRS. Under this guidance, if your ownership is considered community property under state law, so your ownership of the LLC is considered community property between you and your spouse under state laws, then the IRS will accept you treating that jointly owned LLC as disregarded. So what I just said earlier, here's the exception. I said that an LLC owned by you and your spouse by default files a partnership tax return. You do not disregard the entity. Now I'm telling you, well, there's an exception to that general rule. If you are in a jurisdiction where your ownership of that LLC is considered community property, you could just disregard it and treat it as a non-separate entity for tax purposes. What's important to understand is that the IRS sees this as an exception, and so they're saying they will accept you classifying your LLC as a disregarded entity under these circumstances, but you're not required to because it's an election. Choosing to disregard it is an election away from the default, which is to treat it as a tax partnership. So what that means is you can choose. Because it's an election, it's not required. For those of you that are in this situation where you and your spouse own an LLC, it's a multi-member LLC for tax purposes. If you're in a community property jurisdiction where your ownership of that is considered to be community property, you and your spouse can choose. You can just disregard the LLC filing and treat that activity as just occurring on your personal 1040, or you can choose the traditional treatment as a tax partnership. Don't forget, you could even elect, in that case, to treat the entity, the LLC, as a corporation and file it as either a C or S corporation. Well, that's it for this episode. I hope you found this informative. Check back for future episodes on topics that can help your business and tax planning maximize cash for growth. I'm Ty Carr, and you can read my articles and find other resources at tycar.com.